All right, boys, welcome to this next lesson. This one is going to be on IFVGs, invest fair value gaps. So I just taught you fair value gaps, right? And now we're going to go over what is an inversion fair value gap. But just to refresh your brain, come on, let's go over again one more time. What is a fair value gap? It's a 3-candle sequence. The wicks of candle 1 and 3 do not meet, right? We've established this. Wicks of candle 1 and 3 do not meet. That creates a fair value gap. And then there's an imbalance, which is the fair value gap. And yeah, that fair value gap acts as a magnet for price to draw towards, and then you typically see price trade into those fair value gaps and you get a reaction, right? But what is an inverse fair value gap, right? And so an inverse fair value gap is going to be an invalidation of a fair value gap through a body closure, which implies price wants to continue in that direction in which it is invalidating, right? And so what does that mean? Well, if we look at this, for example, right, we see here, okay, price trades up, we create a fair value gap right here, price trades into that fair value gap, clearly respects it, right, through bodies, through wicks, it's being respected. And, you're assuming, okay, well, if this fair value gap is being respected, we're just going to keep running higher, right? Of course. But now let's say price decides to trade through this fair value gap and we close past it, right? So we're not just trading into it and then wicking out of it. That's fine. That's still being respected. Price can trade even up until this point, but then wick past it, right? It can end up reacting and still end up holding that fair value gap. But here we're saying, what if price runs through that fair value gap and disrespects it and invalidates it through a body closure, right? Notice how the body closes past this fair value gap. Yeah, now that is an inverse fair value gap. And so what happens here is, I like to just mark it out in gray because it's, I don't know, whatever. It's just an IFVG, whatever. And so what happens here is that you're assuming now that this fair value gap, this bullish, what was once a bullish fair value gap has now been invalidated, you're expecting price to now just continue lower, right? And so if you have buy side levels resting down here, some buy side liquidity, you're expecting price will now trade towards these levels, right? In very simple terms. So all you're thinking of here is, okay, if a fair value gap holds, I expect price to continue trading in that direction, right? So if price respects this fair value gap, cool, I'm expecting price to continue higher. But if price disrespects this fair value gap and we close past it with a body, I'm now expecting price to run lower. That being said, the same goes for a bearish scenario, right? So obviously here on the right side, we have a bearish fair value gap. And so if price trades into this bearish fair value gap and we seem to be respecting it, right? The body isn't closing above it, then what do we expect? We expect price to continue lower. But let's say price invalidates this bearish fair value gap through a body closure, key emphasis on body closure. Well, now what are we expecting? We're expecting price to run higher because we have now invalidated this bearish fair value gap and it has now become an IFVG. And so the logic behind this, of course, is that you're always looking to see how P to rays are being respected or if they're being disrespected, right? And so if fair value gaps are holding and it's continuing to push, let's say in this case, price higher, if bullish fair value gaps are being respected and they keep holding and price keeps trading higher and higher every time it taps one, great. Now, if we eventually invalidate one and we inverse it, now we're thinking, oh, okay, so this bullish P to ray, this bullish fair value gap is now being disrespected. We get a body closure disrespecting it, and now we're expecting price to just trade lower because we're invalidating those bullish P to rays, right? You don't have to overthink it. Just think so more in terms of like, okay, if price is respecting fair value gap, right, through bodies and wicks, then we can trade in that given direction. But if we invalidate them, now, that direction has now flipped, right? And so you can see that here. So you see price is trading up and we have that fair value gap. But if price isn't going to respect this fair value gap, oh, well, I guess we're coming back down now. Right, and of course you don't just use these confluences singularly, and you have to pair them with things to just build probability and build overall confluence. But right, in this case, once again, let's just go over this really quickly. So here we have a bearish IFVG. What was once a bullish fair value gap is not a bearish IFVG, and now we have a bullish IFVG. And what was once a bearish fair value gap is not a bullish IFVG. So you see how that now flips? This bearish fair value gap, which then acted as support for price to trade lower, gets invalidated, and now we have a bullish IFVG, which is actually going to help us trade higher. And so that's like the cool thing about IFVGs is that they really make sense. ICT concepts, there's a narrative behind everything. There's a story behind everything. So you know, it's as simple as, hey, if this level is going to hold, if this fair value gap is going to hold, then we'll continue respecting them and we'll continue trading. But if it's going to get invalidated and we're going to run through this and we're going to get a body closure above this bearish fair value gap, then now we're going to flip directions and we're going to run higher. Where can we see this? Well, would you look at that? Right freaking above us. And so as you can see here, let's pull up, like, I don't know, maybe the fair value gap indicator, just so you can see all the fair value gaps. So as you can see here, right, we have fair value gap up here, price trades into the fair value gap, continues lower, right, clearly respected, price continues lower, doesn't really trade into more fair value gaps, but whatever, price keeps trading lower, lower, lower. Eventually, we open up another fair value gap, and what happens? Price trades above it, and notice what happens, right? It invalidates it. That bearish fair value gap now flips IFVG. And what's going to happen here? We're going to expect price to now run higher, right? And run through all that liquidity, which is exactly what happens, right? So now the direction flips. The direction flips. We had that bearish fair value gap down here. Price invalidates it through a body closure. This becomes an IFVG. What happens? Look at this. Price taps into that IFVG, continues running higher. Bang, bang. Price is now flipped bullish. We have bullish fair value gaps now supporting this trade as well. And it's really like as simple as that. And they're not hard to find, right? These inversions happen all the time. And they're a great tool to figure out where price is gonna go next. And so if you understand fair value gaps, there's no reason for you not to understand inversions. All you need to know is that fair value gaps, in order for them to remain fair value gaps, the bodies and the wicks need to respect that fair value gap. But if a body disrespects that fair value gap by closing through it and beyond it, right, in a bearish sense or in a bullish sense, sorry, if we close below that bullish fair value gap with a body, now we have a bearish IFVG. If we close above this bearish fair value gap with a bullish move and a body closure, we now have a bullish IFVG. And yeah, to really just put into perspective, like, I mean, how common these are. These happen every single day. I can exit out a bar replay today, go straight into today's price action, right? Pull up the hourly. Let's go to New York session open today. And you can see that, I mean, this is always happening. Where can we see this? Well, let's take a look. Okay, so we see here, price has been trading higher. Eventually, we open up. Well, we have plenty of fair value gaps, but let's say this one, right? So we have this bullish fair value gap right here. We've seen that price has repeatedly respected bullish fair value gaps. And so eventually what happens? We get an inversion of this fair value gap. And notice what happens. The body closes below it, right? And so this bullish fair value gap has now flipped into a bearish IFVG. So what do you expect from here? Well, you're going to expect price to run through all these lows. This sell side, and if you don't know what this liquidity means yet, don't worry. There's videos on that too. But you can now expect price to run lower, you see? And so these moves are happening all the time, but you want to be able to pair them with other things. So it's like, oh, but like, how do I know if this inverse fair value gap is going to work? Well, use like fair value gaps as well to help you understand whether or not that might be a good inversion. And so like if you go on the 5 minute, you see, oh, okay, well, price traded up into this 5 minute bearish fair value gap. We respected that bearish fair value gap, and then we got that inversion to the downside of this bullish fair value gap, which then became an inversion. And so it's really not much to overthink here, right? Inversions are happening all the frickin' time, and it's a very good way to sort of anticipate reversals. And so like you can see the same thing, I guess, even in this leg, right? So clearly you have probably plenty of fair value gaps in this leg. Yeah, we have 2 5 minutes. What would be the highest time frame here? Seems like, okay, like maybe like a 9 minute. All right, that's super random, but whatever. And so we have before, like this fair value gap right here, bearish fair value gap opens up, and it gets disrespected through a body closure. And so after that happens, what do you expect? Well, you expect price to keep running after it invalidates it. Oh my God, I just clicked the wrong freaking button. But yeah, I mean, there's really not too much to overthink here, right? What am I clicking wrong? Sorry. Replay. And so after you get that inversion, you know, price will just continue running higher in that given direction. So as you can see, price continues trading higher, but this is not the best example. However, you can look for them all the time on your own and find plenty. They're happening all the time. And so really, once again, to refresh, I'm going to draw it out for you here, right? If you have bearish price action, this is mainly what it's going to look like, right? You're going to have just overall bearish price action. You're going to have bearish fair value gaps, which are being respected, right, with each leg within each swing. And so these bearish fair value gaps are helping price continue trading lower, but then eventually you'll get a bearish fair value gap which gets disrespected. And so once that bearish fair value gap gets disrespected through a body closure, it is now flipped in IFVG. And what do you expect? Oops, I got a better drawing right here. You expect price to run higher. And so that's really the whole essence of IFVGs. They're great for catching reversals. And this same idea, of course, applies to the downside. Well, yeah, to the downside. So once again, what would that look like in a bullish scenario, right? If price is bullish, you know, this is most likely what it'll look like. And so you have continuous bullish price action with retracements into fair value gaps. Fair value gaps get respected, right? And then eventually you get a fair value gap up here, which gets disrespected through a body closure. That becomes an IFVG, and this all gets ran through. And so that's really the whole essence of fair value gaps. Inverse fair value gaps. And so all you need to know is that in order for a fair value gap to become an inverse fair value gap, you need to have a body closure of a candle through that fair value gap. And it has now flipped from a fair value gap to an inversion. That being said, thank you for watching this lesson on IFVGs.